Hey all, welcome to ShareTreck. This is Raj here. Good morning, and everything looks good this morning in terms of the futures. All the three futures index are mildly positive, but let's not allow that to fool us, because the main issue out here is what's going to happen with the inflation, because it's the inflation that drives the bond yields, and if the bond yields become attractive, more money goes into the bonds and out of equities. So that's the way it happens. And there have been some talk, like Tom Lee the other day, he was saying even at 5% yields, stocks are still attractive because we have a P by E of around 20% on an average. So it's still superior. But that said, we are still seeing an inverse correlation between S&P 500 and the yields. As the yields go up, S&P 500 comes down. So we are still in that trend. So we should remember that. I'm just going to have a quick look at the top indices. You can see that we are still in a regime of lower highs and lower lows, and we have not broken that yet. Until we break that, I think we are going to be in a bear channel. We are clearly below all possible bull channels that we could imagine, and we are still above the 200-day exponential moving average. That is the only redeeming factor. But if I look at the MACD and momentum, they are not looking great. And even if we had a bunch of green days, I think we need to cross over 43,294 and retest it to be sure that we have broken the bear channel. That's my opinion, of course, not financial advice. So you guys, you use your own logic and let me know what you think in the comment section. Now, likewise for QQQ, we are clearly broken down below the line of support, this diagonal line of support which was there from a long time ago. Fortunately, we are still above the 200-day exponential moving average, so I'm happy about that. But MACD and momentum, they are all looking very bad. And I'm not seeing any bullish divergence either. So I think we are firmly in a bear territory right now in the context of a larger bull channel. So we don't know when it's going to stop. S&P 500 also is behaving the same way, and we have bearish MACD and lower momentum out here, and we have forming new lower highs and lower lows. So that's not a good sign for us. 5,841 seems to be the new resistance that we need to break through. Right now we are at 5,836 in the pre-market. If we break above this and retest it, then I would say that our next resistance would then be this diagonal line. So we'll be in a bullish pennant or wedge, and we'll have to break through, and typically the breakthrough happens on the upside. So for that, we have to get into this wedge and then break out. MACD, momentum, all are looking weak. Same is the case for Russell index as well. And unfortunately for Russell, we momentarily broke down below the 200-day exponential moving average. So the situation is quite precarious out here. But I can see that there is a little bit of greens happening. Maybe it's a bounce back. Maybe Russell index indicates that we are going to come out of the bear channel sometime soon. But there's a lot of work to be done on Russell to create new higher highs and higher lows. So we'll have to see the next few weeks. So everything brings us back to the same thing, that is inflation details that we are expecting to come out on Wednesday at around 8:30 a.m. That's what is going to determine where we are going to go from here. And if I was to look at the put call ratio, it is still neutral. VIX is down 1% in the pre-market action, and it has got support at 18.16. Right now it's at 18.99. So if it starts coming down, I think that's a good sign for us to look at. But if you look at the MACD and the momentum, it doesn't seem very promising, but at the same time I would say it's a neutral indication right now. I don't know if VIX is going to go down, or maybe it will bounce off this support and continue to go up. If it continues to go up, of course, the market will go down. Now, coming back to our stocks out here, I think that I won't do any trades today. I would be watching NVIDIA very closely, because NVIDIA could probably breakout. Right now it is up 1.24% and it's at 134.90. We had a support out here of 130.15. We bounced off that support, and we are right now above this diagonal wedge that we had here, this diagonal line of support. And I would like to wait and see if we can break out about 135.42. And if we did break out about 135.42, then I want a retest to happen so that I can be sure that we could move in. The headwinds for NVIDIA has basically been that the new restrictions that have come in from the US government of which countries the chips can be exported to. Of course, there has been a carve out for big tech companies, US big tech companies, if they wanted to install data centers in other countries which are not on the list, they could do so, but they'll have to follow some strict regulations. So all this is making it seem as if NVIDIA's market would be, all this makes it seem like NVIDIA's market will stay constrained despite its tremendous potential. And that's what is happening here with this consolidation, because the markets are trying to feel what is going to happen. Again, for this, the inauguration will be a big deal, because if Trump gets inaugurated and he decides to scrap that legislation, then probably NVIDIA will start jumping again. So I'm looking closely at NVIDIA to dollar cost average. And if there is any further weakness, I'll definitely buy a little more NVIDIA. So that's my plan. Apart from that, I'm not looking at anything else. I do have FNGD, which is picking up value. I'm going to sit and watch what happens until the economic news comes out. And after the economic news, my next focus would be on Trump inauguration. And for you to get an idea of how things are shaping out in terms of Trump's inauguration, I want to show you a stock. DJT stock. Now this stock, fundamentally it has got nothing going for it. It's not making profit and it's highly overvalued, and it continues to be overvalued because Trump is going to be in the White House, and there could probably be opportunities for him to throw business the way of Trump media. And also he may do a lot of his, I think, truthing is what they call it, not tweeting, truthing on Truth Social. And in order to get the information first, there'll be a lot of media joining Truth Social, and then there'll be a lot of people joining Truth Social to check out those media, so that snowball effect might come in because of Trump presidency. And that's what this whole deal is all about. And I think whoever invested in Trump media somewhere around 12.16 are having a good laugh right now, because while the rest of the market is going down, Trump media is going well. So congratulations to all of you who managed to snag that deal. Now let's go on to have a look at our genomics. And in genomics, I think Grail did well yesterday. Bluebird, for unexplicable reason, did well yesterday. And Illumina also did well. For Illumina, of course, I think it's a solid company and it has been consolidating for a while. So I'm definitely bullish about Illumina. Our cup and handle target was at 161.71. And I'm still hoping that we'll reach there someday. The chart is looking pretty good for Illumina, and pre-market we are up 0.82%. Apart from this, I do not see anything major to report out here. Caribou, as I mentioned earlier, even though it had a little bit of a positive with some favorable news, bullish catalyst, as I mentioned, even before the market opened, all the positive was gone from day before. So that's how the market is right now. Everything is very bearish. We are marching down. There is one thing that I would like to bring to your attention once again. I've spoken about it before. It's with regard to bonds. Now, if you look at the 10-year bond, right, I think that it's going to go easily up to 5.4 unless there is some kind of an intervention. And as the 10-year keeps on going up, I think the markets are going to keep on going down. And then you have the 5-year, that's also revealing a cup and handle pattern, and it will also have a higher target, and likewise for 20 years. So I think that unless the yields start coming down, I don't see any reason why the markets are going to go up. So we wait for the inflation data. This is the only thing that could move the yields. And then we wait for the inauguration, because something that Trump might say or do could change the market. And here is another radical thought I have. I think that we could also get into a scenario wherein the rest of the market is down, and the AI sector and the AI adjacent technology sector, which is all these data centers and LLMs, those companies might probably be in a bull market while rest of the market is in a bear market. I'm saying this because AI is going to improve the productivity manifold. It's like an industrial revolution. And if you see the recent headlines, you are seeing companies letting go of corporate hiring, reducing internships. All these things could probably be a sign that we are going to see increased deployment of AI and therefore more productivity. Already ServiceNow is advertising agents, that people can use agents to do various things. So those kind of developments are likely to drive down employment. But all the companies which are letting go of people also realize very well that the employees that have been let go, they are not going to have earnings, and therefore they are not going to be good customers. Their purchasing power is going to go down. Therefore, the product's cost also should go down in order for the economy to function and in order for the company to survive. So I think what those companies are likely to do is they're going to invest in AI. And that's what is going to create a bull market for AI and AI adjacent, whereas it's going to create a bear market for all those companies because their capital expenditure is going to go up, their bottom line is going to go up, and the outlook for their business in the future in terms of sales is going to go down. And if one were to focus on the margins will start improving after successful deployment of AI, identifying the use cases. There is going to be a bit of turmoil, and then we'll have the market leaders coming up. So this is my thesis. So please guys, let me know what you think. Put it in the comment section. And with that, my friends, I'd like to bring this video to an end. Thanks and have a great day, and bye for now.